You're live. I'm sharing our screen here. Welcome, everyone.
Hello, everyone. So this is the Panoptic team. Thanks a lot for joining. We again we're all here. Some of us are from all over the world. We can go over. We have all the devs here. We have also the research team. Brendan, of course. But there's Izzy from BD. There's Rosalie from marketing. Go visit is going to be at the app.panoptic.xyz, and maybe either in the chat or here someone locally can see when it's live. But yeah, we've been pushing a few updates on Versal. It just needs to build, and when it's done, then it's going to be live. And again, I think I see it's still, no, it's built. So we'll see very, very soon. But yes, we are launching now after a couple of years of work. Thanks to all our supporters, all of us, all of the people that were able to kind of support us along the way. We take safety and security first, so that's why it took a bit longer than we thought. The protocol has been kind of functioning for the past year, and we did beta competitions, tuning competition in the beta. But then there were a few issues on the smart contract side that needed us to go a bit deeper. We did invariant testing billions of operations in random orders to find not bugs but edge cases that needed to be taken care of. We did 4, I think, crowdsourced audits with Coderina and Cantina. We did Open Zeppelin. We did as well. Trail of Bits helped us with Invariant. We did ABDK. So overall, we just had a long journey. The ideas were around for a long time. The implementation was done. It's just the final touches that took us a bit longer. But at the end of the day, might as well. It's been locked for the past month and a half. The code base, so it's ready, and nothing prevented us. So that's why we're launching now. We do want to thank our backers. So Gumi Cryptos and Greenfield are the lead investors in our previous rounds. We have backers from Uniswap Foundation, Uniswap Plus Ventures, Jane Street. Again, it's on our website as well. I don't want to forget anyone, but overall, we're just kind of of course, this is the starting line. And again, we want to thank everyone that was there, and I'm pulling up who was there. But yeah, there's Coinbase Ventures, of course, Blizzard Fund, Hailstone, 7X, Divergence, Z Prime, MH Ventures, Big Brain Holdings, Hashkey, L1D, of course, Hardcore, Comma 3, Polo Crypto, Bing Ventures, Contango, Distributed Capital Partners, Kirok, and Biden. So overall, we're going through everyone. Yeah, there's a echo. We did an echo round. I won't go over the 400 people that participated, but overall, thanks for those that may be now live seeing us. But yeah, this was a huge signal that we sold out in 10 minutes. The first one, the second one was 2 hours, but overall it was very, very in demand, and extremely happy about how it went. And yeah, so overall, and this is going to be what I'm trying to kind of initiate here, but we are launching an options protocol, and TradFi has options. They have them from hundreds of years, and since the 80s and 90s, it took a lot of the trade space in TradFi. Trillions of notional value are traded every day. The derivatives market dwarfs the spot market or the stock market typically. But if you look at it, it's not for most of us. It's not for retail investors. It's not for even like upper middle class. It's actually for the big guys, the hedge funds, the banks. They are the ones that tap into the power of options in a way that we cannot. And I had to personally rely on my, I won't say which account, but brokerage firm to say, yes, of course, I have 20 years worth of trading experience. Allow me to sell calls, right? So Robinhood pushed this forward very well with, again, GameStop and some of the options, but it's not something that most users are familiar with. And we want to change this. We want to make this as integral to someone's portfolio as, say, lending and staked and spot trading and maybe perps. We want options to be also a component of anyone's trading strategy and risk management. So overall, we will be, I'll show the interface. It's very much aimed at retail, but of course, large players can also trade with the same one. But it's going to be where retail users will be able to trade, will be able to understand it. We will create content. I will discuss how I use the platform, how people use the platform, get feedback. So overall, we just want to make this more democratic in terms of access. You can trade with maybe 1 ETH or less on layer 2s. Don't try this on layer 1s because of the gas. But at the end of the day, we don't have any limits. We, of course, have to know who are the users, and US users may not be able to access this. We have a private link that I will show, but overall, even us aren't necessarily able to do it to trade using it. But overall, we can use as many. We want to advertise this to as many people as possible. Make it so that most people can trade without having to kind of again lie on their application. And yeah, at the end of the day, this is kind of the journey. I won't battle for too long. I will actually go around the room. Anyone has a final comment, I guess, before I share to the reel? It's live now, but yeah, any comments on your side before I kind of go to the interface? Everyone's good? No? All right. So if I go to the actual Panoptic website, and then you'll see it here, we can launch the app. And this is it. It's live, you guys. So on the actual trading app, oh yeah, you have to do accept. It's probably going to tell me I'm from the US, but that's fine. Yes. But this is the trading app. This is how we can actually start to see the markets that have been created. And the way this works, I'll go through the process. I may switch to the other interface that allows me to trade, or at least show the real trades. But the interface is very decentralized. You can create any market you want. So we personally, the team, deployed the BTC ETH pool, the USDC ETH as well. But we also did SPX, MOG, Harry Potter, Obama, Shiba Inu, 10, and then wrap II coin. So we wanted to signal that we can create pools or markets on any pair that exists. And if we go from the main page to search for a different market, we have those that have been deployed that are here, but also all Uniswap pools could also be converted into a Panoptic pool where we can trade options. So those are the 6 that we deployed, but anyone can go and create a market for the different pools. I'll go to the create market flow in a little bit, but for now, anyone can trade those. Some people internally have even deposited some funds. And if I go to the BTC ETH, we show, and those that know Uniswap will be familiar with it, but we show the liquidity. This is what's owned by Panoptic. This is what's owned by Uniswap. And tiny line. There's a sliver of liquidity that's Panoptic. We have liquidity on top. It's a small amount, but we want to see the pie grow and eventually have the Panoptic liquidity exceed the one from Uniswap. But we still show the liquidity distribution, which is what people are familiar with. We still show like the different blocks of liquidity, but we use a options introduction, if you want, an options mindset a little bit more. And the way that we kind of realize this, that if you go to the trade page, which is what you would normally do to create positions, this is the, let's go to BTC ETH. If you want to trade the ratio, for instance, if you want to trade the ratio, I can go there. You can actually trade the ratio of BTC ETH in a way that is using options in a way that you cannot really do on either Deribit or CME or whatnot. But we still show the distribution of liquidity, but we allow people to trade options again on BTC ETH. And some people may say, oh, I think the ratio is about to revert. Let me get a call option and go up. Actually, yeah, it would be a put as well. But yeah, you can physically see what is happening is that you are interacting with Uniswap liquidity when you create an option. Buying an option, in that case, I have a few choices to buy an option. There's going to be more as people sell, but you can buy options that's been sold before. So in that case, it only locks on these 2 that are available, but this is the payoff of what you would expect to see. So the price of BTC in ETH term is the ratio. If it goes up, it means that the ratio is cheaper for ETH, more expensive for Bitcoin. Maybe I want to buy a put option, for instance. You can actually buy it, but the key one is if the ratio reverts, you make money on the way down. If the price goes up again, you lose a little bit, but it's not like a perp where you lose. So all of what people will see is this interaction with the payoff, the liquidity that exists. If you want to sell an option, which is what is vanilla LPing right now, you can go wherever you want, but it's also going to be depositing liquidity in Uniswap. And we have the ranges here on both sides, but that is where the liquidity will be shown. I would be deploying between 20.84 and 33. So that's kind of how you deploy some liquidity. And maybe I'll create a very, very small position. Oh, I don't have liquidity, but yeah. So that's one way to interact with Panoptic and Uniswap. You deposit liquidity to create the payoff you want. You can do a straddle, which is kind of this two-sidedness. This is a little bit maybe what people have in mind when they think about deploying liquidity. Or you can buy a straddle as well. You can actually go long and buy whatever is available. So at the end of the day, even though it's based out of Uniswap, we abstract this away a little bit. We want to convert all of you guys to be options traders and not necessarily have the liquidity depositing, removing, collecting in your kind of, you don't have to worry about it. You just have to worry about where the price is and where it's going to go. So that's kind of one new way that you will have to kind of learn, and we will do a lot of efforts to kind of make you understand how these payoffs work and look like. At the same time, we have something that people may be more familiar with, which is an options chain. So you can still interact and create positions with that options chain. This is something that if you go on with Robinhood, they have some options chain. We can go to the market of the different pools and also through the options chain, but it's also a different way to trade, different way to get onboarded. You have the strikes in the middle, you have the open interest, the delta, the Greeks, all of what you want, but you can also enter a trade through that options chain. And if I say I want to buy the 360 put, I can just go and buy, and it's going to bring me back to the trade page. But yeah, you can actually have this be your entry point. So overall, maybe a new way to invest, a new way to maybe get alpha to generate revenue, but it's also about risk management and how can you actually preserve your wealth or make it grow in a way that is not as casino-like, but also like a bit more grown up. And one thing that is maybe one of the most important features that you can actually limit your losses in a lot of these positions. This is the power of options. You have insurance built in a way. And if you are selling an option, typically the value that you can lose is going down to zero or even more than what you deposit if you keep it naked. And same thing with naked calls. But what you can do is that you can buy protection, and this protection will limit your loss. It'll be 5%, 10%, 25%, but you maybe have a better, more peace of mind because you don't have to worry about the price moving too much. You buy protection. So it's like having a unliquidatable position because it's netted against these two legs. So you can actually limit your risks on the upside and downside. You can do it also on both sides, which is going to be what, want some of these weird names come in, but Iron Condor. Oh, yeah, no, it's too broken to show. It's on the green, but you have some protection on both sides, and you make money if it stays range bound. So all of this will be hopefully trades that you guys will explore, trades that you guys will try out. And this can look scary. This is impermanent loss on both sides, but this ability to buy protection might be kind of a good way to limit those losses. So the whole thing, again, we're extremely proud of it. It's very, very smooth looking. It's a new type of app. It's not something that you probably have seen elsewhere, but we are extremely proud of it. And again, there might be a learning curve, but we feel like this is kind of the only, one of the best way to do options, showing exactly what you get into. And yeah, so at the end of the day, it's just got to be something new, something innovative, something that we haven't seen ever. Even TradFi options traders, they hear about it. They say this is very, very intriguing, and they want to learn more. So this is kind of the way that we also have a new way to do options, a new way to do DeFi. The same way that Uniswap and Binance operate differently, but they still track the spot price. Binance is an order book. Uniswap is an AMM. We expect the same thing to happen with Panoptic, which is, again, not quite an AMM, but LP side of AMMs, and Deribit or other protocols which may be order book based. So it's just going to be a different trade. You don't arm the price, you arm the volatility. Volatility is an extremely important component. This is something that, again, most option traders will have to know a little bit about, but at the end of the day, we're going to be there to support you and create an experience that is seamless and very, very good for you guys. So I'll actually share, yeah, so that's the interface. That's kind of how we see the protocol evolving, making it useful, more useful for people. This is another portfolio that I'm using, but you can see existing positions, and if you want to track your positions as well, we also use the traditional payoff curve that you have here. So I minted it when the price was here, and now the ratio went down again. So, or at least so I may be losing a little bit of money, but at the end of the day, I'm still in range, and I'm happy because I'm collecting premium. This is monitoring an existing position. You can see how much premium you earn over time. We try to, this is the feed that would be collected in Uniswap, but we try to show the information in a way that is kind of indicative of what happened over the past few days. Same thing here. We can show the positions. If there's other people in the same strike, we can show them. So overall, it's very rich in terms of features, and the protocol itself has also a bunch of features that, again, you guys will take a long time to get acquainted with. But again, we're there to support you. But and then I'm proud to say it, we're going to be bringing feature set of DeFi options to parity with off-chain or TradFi options. We have made it capital efficient. We've made it kind of, you can have a net positions against one another. We have portfolio level margining. It's still by market, but it's going to be something we work on. But overall, it's just very advanced, very unique, very new. I've been blabbing about it for the past 2 years and now for the past 20 minutes. But overall, this is very, very exciting for us to have the platform finally go live. And yeah, so I think for now, I'll touch upon 2 points. And then after that, we may be opening up to questions, or if people have questions, you can post them in the chat now. One thing that is unique as well is that you don't have to be an options trader to participate into Panoptic. If you go to the markets page, those that exist have some TVL. But if I were to say, I like the MOG coin, I don't want to lose my MOG coins, but I like to get yield on it. You can actually deposit MOG or ETH, single-sided, any ratio you want, but you can deposit your coins that you're holding in your wallet or your cold storage and earn yield on them, because you, as a depositor, you can lend these coins to traders and market makers. So if I deposit some funds, these funds can now be borrowed and I get a yield, a commission on that. So that's we call this passive LPing. We bring passive liquidity provisioning back to Uniswap. But if you don't care about managing positions, don't care about options, don't care about LP positions and range, you can actually earn by being a lender to active traders. And that's going to be maybe the most important feature of Panoptic. You can launch any market you want. You can add, there's a mini lending protocol within Panoptic, but you can earn a yield on most coins. And the ETH in the ETH MOG pool may earn a much higher APY than the ETH in the ETH USDC pool or BTC or ETH staked ETH. So there might be a lot of markets to involve to deposit with, a lot of different ways to earn a yield. And as long as you deposit your coins, they can be borrowed right away, and you can actually earn some returns out of that. And another way that you can also participate, and yeah, maybe go. So, and this is kind of one way where passive liquidity providers that have a bunch of coins don't know what to do with them. They say, hey, I have some Uni token, or maybe Pepe even, but some Uni token, I don't know what to do with them. I could be lending them out to market makers. And these market makers may make 60% APY, but they're happy paying 20-25% APY because they kind of tap into that extra yield. So that's kind of going to be one aspect of Panoptic, which again may attract a lot of users. And finally, one thing that is not an Easter egg, but something that's actually pretty cool is that if you want to create a new position, so we're back at the markets page. Maybe I'll zoom in, but all of these have been deployed. All of these we can create permissionlessly in the market. So we should go to create the ETH Uni market, for instance, an NFT to whoever is publishing or deploying new pools. You have to pay the gas, and on mainnet it could be maybe $100. But we issue to you an NFT, and these NFTs have been designed by Elithia, which is one of the designer. She did a few NFT collections like the Crypto Covens, and she's an excellent designer. She took some of my own drawings, made them pretty. But we created these NFTs that are on-chain generated SVGs. They can live for what it is. You can mine or change the type of trade you want to create. This is a BATS strategy. And the more you mine, you can change. And the option strategies all have funny names. This is a bear spread. So you can actually loop through and see the different strategies that you want to create. And butterfly is a strategy that I'll probably be using myself quite a bit. But as you mine, you can create different type of designs. You'll probably cycle through and choose the one that you prefer. One Easter egg is that there's a rarity component to it, which is how much in the rarity is when you deploy a new pool, it's a so that the leading zeros is giving you the rarity. So here, this one has 2 leading zeros. It's a mythic rarity 2. Same thing here. Let's see if I can get a 3. But yeah, the more zeros there is, the more you have to mine it. It's a bit by chance. Sorry, it's taking a bit long, but the 2s is what we get. 4. Look at this. So this is a Rarity 4 bear spread. If I were to deploy this pool, it would have 4 zeros. So something fun, so that you get something back by spending some gas deploying a new pool. This is legendary Iron Condor. I want this one, but this is another one. And also, one cool thing is that since we deployed those pools already, so we have these pools that exist already. We also created NFTs for them, and then we spent some funds to create cool looking / high rarity ones. And this is the 6 markets that have been deployed. The addresses of those is a bunch of leading zeros. In that case, there's 12 leading zeros for each one. So this one in particular, this is the Bitcoin, but Harry Potter Obama Bitcoin Rat ETH pair. It's a rarity 12. We call this prismatic Iron Condor. And the more rare it is, the cooler looking it is, we believe. So all of the first pools were 12 zeros. So that should set the standard for anyone that wants to create a new pool. Don't get stuck with these common, but also have the high rarity ones. And yeah, so these will be airdropped to the different teams. The MOG Wheat team will airdrop it to their wallet. Same thing with the Bitcoin or II. But all of these were mined with, were crafted in a way that was purposely making them cooler looking, something that was on the kind of interesting side of NFT minting. So we, of course, took inspiration from the Uniswap V3 smart contracts, but now these are only issued to pool deployers. So it makes them like you have to be the first and only you can get it type of thing. So I think that's it for now. So again, extremely excited about the launch, extremely excited about the permissionless nature, how we believe the way to trade options will be part of everyone's kind of strategies. And again, all of our DMs and Discord, everything is always open. We want to hear from you as well. We want to make sure that you guys get the best experience out of it. We don't want to have you try to do a god tier trade and lose all of it, but rather if we can talk about it, we can craft a good trade for you that fits your risk profile. So I'll stop sharing my screen. I don't know if Brendan, who's the MC, has some feedback, comment, people that want to join, or but that's it from me. Again, congrats to everyone. The whole thing worked tirelessly for this. Extremely happy about being live.
Before you stop sharing your screen, someone actually had a question about if you could show the Trump Weath pair live. I dropped the link in like the create markets page, so someone would have to create it first. But maybe you can show how you would go about creating like a new market for a pair like that. That one. I'll send it over to you on Slack here.
You know, while Guillaume's working on this, I just want to mention, and by leveraging Uniswap's decentralized liquidity, it really does deliver. So congrats to Guillaume and the team on this.
Yeah, of course. Yeah, Tom is an OG. He was an options trader at FX in London, made his career trading options, but he brings in a unique perspective as well. But he's seen the flaws and he's seen the good sides and the bad sides. But yeah, he's helping us kind of figure out the best way to do it. All right, let's see. So back to so we can input any coin here. There we go. I don't know if they have is there a Uniswap pool? Maybe not. But yeah, if there's a Uniswap pool, we can. Again, I think Pepe may be another one that whoever has Pepe bags, you can. Oh, some Z issues here. You can create the Pepe pool. Maybe the community can furiously click for a while to get the best one. There's Create to Crunch. There's GPU based. We did server farm as well, but we can help you as well not waste and create a common Pepe naked position Pepe Weath. But then if you have this rarity one, could be very cool. So yes, any pool that you can create on Uniswap, you can create on Panoptic. You can trade right away. It's again taking over the LP side. So if there's an existing pool, there's a bunch of LP liquidity already. If it's not, then you just have you'll be the only provider, but that's fine. You can trade and get paid even if no one buys it. So
yeah, and you can actually create the Uniswap pool directly from the Panoptic
Yes, that's correct. Maybe there's going to be a meme coin farm feature. You deploy the ERC20, the Uniswap pool, the Panoptic pool to the moon, or whatever, to the gutters.
Wonderful. Well, yeah, if there's other questions, please drop them in the chat. But are there any announcements you have as far as the pips go? Yeah.
So yes, we of course do points. We want to incentivize users to use the platform. These points are we've published them a while ago, but it's a point system that rewards maybe what we think is the best type of behavior. We designed it in a way that is kind of somewhat Sybil resistant, and you also get rewarded the more trades that make you money that you do in terms of the type of trade. So if you sell an option, if you get a lot of premium, you get paid a lot, that means the trader was enraged and you are getting more points, and we call them pips. If you're PLP, where you deposit funds and lend them out over time, you also earn more points by being a lender than not doing anything. And same thing with buying. So buying, we reward some of the we offset the losses maybe and award pips on the amount of premium paid. But overall, it's just a new system, a point system that will reward and guide users perhaps towards the right behaviors. We have a launcher website that if you plug in your address, you may have a boost that is going to be airdropped to you. And if you've been a Uniswap V2 LP or Uniswap V3 LP, you get a rather large boost on your points. And this is kind of the signal. If you've tried Uniswap LPing a year ago, 2 years ago, 3 years ago, and didn't like it, we can still attract you back by giving you a boost of points that you will have to kind of work to earn. But at the end of the day, you can actually revisit with a little bit more confidence that I guess the pips will be a reward in itself, of course, but that you can revisit some of these ideas. Most of the people I meet at conferences, meetings, they all tried it Uniswap V3 LPing, and a lot of them didn't keep doing it. And if they do, it's sometimes like stablecoin pairs or ETH, state ETH. So this is one way, but for the larger coins, Pepe, WETH, there is some people doing LPing. They are sophisticated to know what they're doing, and we want to make, of course, those users use Panoptic. But if you shift your perspective, and instead of thinking about liquidity and being in range, you think about the payoff that you create in the ETH, for instance, Pepe, then that's a good way to kind of get onboarded. And in the pips, we will show it, and there's going to be a leaderboard. For now, we'll keep it under wraps for the first week or two, that you should try to farm different ways. The specs that we've published was pretty accurate, and this is what you'll get in terms of the, what's one ENS name that we had?
HHH.eth.
And who's that? Do we know? Do we dox someone? So this is someone that had 5x. They were in Uni V3 LP. They were in Uni V2 as well. So they get 6.5x boost. And the multiplier, we can go on the, I don't know what document it is, but yeah, we can go on the document to see how it applies. But if you've been a beta user as well, or a POAP holder, or maybe an early depositor, you may get a boost as well. So yeah, I don't know if Hayden Adams, I don't know if that exists, but anyone actually that was a Uniswap V3 LP. V2, interesting, but yes, no V3. So this is kind of one of the cool way that we want to signal to users, hey, you've tried Uniswap V3. I've been publishing research and content, but this is maybe on the more advanced side. But again, by linking this all to options, we believe we can actually introduce a lot of users back to Uniswap LPing, in that case, options trading. So we understand, yeah, we have some features, the charts, the options chain that show up there. But at the end of the day, we're also open for feedback. Everyone that is on Discord, or at least also reaching out even on Twitter DM, I'll be happy to answer your questions. But yeah, the pips will launch. We will announce the first wave, I guess, maybe in 2 or 3 weeks after we've kind of been launched for a while. But yeah, we'll also be cognizant that there's a pips program running, even though it's not obviously shown on the interface.
Yeah, can you go over which markets are available for pips right now from data?
Yes. So currently on the existing markets, and that's something we may indicate, it's only these first two, which is ETH USDC 30 bips and ETH BTC 30 bips as well. So both of those will be what we start with. As we expand, we will certainly add more markets. We will add either different pairs. I'm not sure we can incentivize the Pepe side of deposits, but maybe the ETH side of these pools. So at the end of the day, we expect that the program will expand and maybe cover most pairs that exist. But for now, we start with these two, and this is kind of our soft launch. We'll do this over the holidays, so do some Christmas trading, you guys. But then January will be when we also reveal the pips, have more sophisticated users and market makers be on the other side, go to layer twos, expand there, and the pips could go also to the layer twos as we launch.
Great. So you can actually start earning pips right now, right? If you were to deposit in these first two pools.
Yes. And again, without it's all public, but we make it even easy to see people's transactions. So anyone that is kind of trading, we can see them. You can spy on them as well. But yes, the data is there. It's easy for us to onboard any users, but also to kind of keep track of the amounts in pips that you collect. Yeah, nice.
Wonderful. Okay, yeah, we'll look forward to those features coming soon, so you can track your pips. But you can start earning now then by depositing and trading in these two pools.
Yes, and as the also not word of warning, but the normal flow of trading is you can only buy an option that's been sold before. So conceptually is that if someone deposits liquidity in Uniswap through Panoptic, you can interact with that liquidity and buy it, which is kind of shorting it or removing it. But if there's no liquidity, you can't necessarily trade. So for those that want to come in and they want to buy options, the offering may be limited at first because people have to sell first. So we expect a few days, people will get familiar with the idea, familiar with what to sell, what to buy. I'll be trading myself as well. But if you want to buy, you may have to see the platform grow a little bit before you can buy anything you want at any size you want. But if you're a seller or a market maker or someone that want to trade like in a way that is pretty sophisticated, then you can sell at any strike you want. And that is something that, again, the interface doesn't prevent you from doing anything. So so in that case, sellers, of course, it's more dangerous. You have these risks, but we allow people to be a bit more kind of risk averse by having wide positions. You can have so the whole thing is pretty new. I welcome everyone to try out the interface, click around, think about the type of trade you do and the size and the risk that you expose. We try to make it obvious what the size is. If I create a huge 5 ETH naked call and the price of ETH goes from 4,000 to 6,500, I lose 12K. So we try to show here how much you lose and how much you make, but it's like I could make 1,000 if it goes the other way, but at least make sure you understand the risks. Selling options is, it's actually what Uniswap we do was, but now we make it a bit more obvious what the risks are, and then you have to understand. And if you don't necessarily, you can still cap your risk, I guess, by buying protection, as I mentioned earlier. So that's another way that you can also prevent huge losses. The width of your position has an impact. You can be very narrow, and that's going to define how much you are exposed to risk. We hide this in advanced mode, and again, we'll see. But you can do daily options, and remember, this is very, very narrow. The narrower you are, the more risk you take, but the more short-dated it is. This is an hourly option, so could go up and down $50 or $100 in a day or an hour. So that's kind of this. But you can also go wider. 1 month is quite wide, 3,000 to 5,000 type of thing. 1 year, if you just want to create something that you want to look back in 6 months, you can set a call between 2,000 here and 10,000. And that's fine. You'll make money if the price goes down. You'll make some yield if the price stays put. and you can maybe get exposed, but maybe you're okay with like setting a covered call, for instance, which is what this would be, and not have to worry about it's like DCA in out of a position. That's what a covered call is. So a lot of it is, again, got to be what we focus on. The Twitter, the videos we produce, everything will be kind of helping people understand what options are and how to trade them. But the key point that the DeFi native users, the supporters, everyone that has been in DeFi for the past few years, they are the most sophisticated financial people around. They can probably figure this out very quickly. It's not teaching your grandma how to do it, but it's teaching like someone that's pretty good at it. So we are very hopeful that all of these markets, especially the meme coin, you can trade on meme coins and get some level of a bit less risk, but at least different type of risk than if it's your Bitcoin or ETH that you have to par with. But yeah, we can also have this Bitcoin, this meme coin approach be the gateway drug if you want two options. And you may sell a covered call on your wrapped II coin or Pepe or MOG or again, Bitcoin. But then it's fine. You're making money in ETH terms. So that's a different way to approach this.
Very powerful. I'm very excited. This has so many cool features. It's definitely something to play with. We have a question for Hunter if he's here, Harish. The question is from the chat. Somebody knows him. He's the GOAT trader. What would you recommend the market look like at this time? If you want to comment on that. Or feel free not to.
No, I don't think put him on the spot.
Or if Guillaume, if
you
want to,
you can tell your mom in person after she asks you that question. So what's the question you said? What's the market?
What's the market looking like right now?
Oh, actually, yeah. So personally, when I look at the market in TradFi, I trade a bunch of options myself, but I always look at the IV, at the sentiment. If there's a puts queue, calls queue that dictates what people perceive the risk to be, even though there's calls queue, for instance, which is what you may have for Bitcoin, doesn't mean it's automatically going to go up, but people think this is where the upside is. And if it's puts queue, people are protecting against the downside. So I would say that it's a very early in the life of Panoptic. But if we were to look at the Uniswap liquidity, you can actually draw some insights into it by looking at the liquidity, looking at where people deploy liquidity. Here, this is liquidity that's out of range between 4,000 and some not. So this is probably someone that wants to sell out, and they see the risk being on the upside. They want to sell out, or at least they want to leave their position. So all of what we're seeing is going to be, at least personally, under the lens of options trading. One thing that we show as well is the IV of the pool, and this is kind of what I turn it in the UBO interface, but the IV as well is going to be driving a lot of these decisions. Again, Bitcoin here has 200% IV, SPX 130. This is high, very high for TradFi. And then BTC ETH 40%, which is reasonable. This is like the Apple stock type of volatility. And 60 is maybe Tesla, and 190 is like MicroStrategies. But a lot of what you may be expected to see is the IV being the entry point, the IV being what is tracked. It's not there, but we may show the IV over time. When you look at the IV, and this is your IV for the stablecoin, but the IV is going to tell you a lot. And the same way it spikes when there's a huge crash, we expect the same thing to happen. So I think now it's probably going to be, it's quiet, and I think it's going down. And then because most of these IVs have been going down a little bit, but so yeah, I wouldn't say it's a exciting market to maybe buy calls, but if you sell puts, if you have a buy puts as well, you may have some edge. But yeah, to each their own. But yeah, it's always going to be quite vast what you can do with options.
Yeah, and Guillaume, I'll just jump in on that. One of the questions a lot of investors ask when volatility is high, how do you make money in an options market? And one thing you see in traditional finance, particularly in equities, is using a buy right strategy. So you've got the underlying exposure to the asset, but to enhance your yield, you can sell call options against your holdings. Obviously, in a really aggressive market, you'll do better just holding the underlying asset. But in many cases, as the market sort of 2 steps up, 1 step back, this is a nice way of increasing your yields, and at the same time getting a little bit more. You give up some upside, but at the same time you can consistently earn more money in a flat market or a market that's sort of trending upwards, but not aggressively. So I think over time you'll see a lot more ways of capturing or using the options market in crypto, which traditionally is a very small market compared to the spot market. So I think it's going to be really interesting to see how this evolves and see how users take advantage of this.
You could be a retail user and sell calls, and this is what the payoff looks like, I guess. But you sell calls against your underlying, you have some capped upside, but you can be a treasury or a token launcher or a risk manager. And selling calls against your position is bread and butter for a lot of these kind of funds and kind of options trading in TradFi. So selling calls is a natural thing to do on Deribit, on Bitcoin for if you're a miner. Natural thing to do maybe on ETH if you're even a staker, you have a steady yield of ETH that you want to kind of collect yield on. But if you have a large holding of MOG coins, then you can also sell calls against your MOG. Someone else can buy that call, get upside exposure. You're on the other side getting the downside protection. So all of it will be kind of two-sided, and that's going to be a lot of what we see. We encourage people to be, of course, careful, not go with too much leverage. But if you own the asset and you sell a call against it, you cannot be liquidated ever. You always have the asset to cover, quote unquote, your position. So that's kind of where we want to have people start with as well. Even though you may be selling options and getting exposure to the downside, the most you can lose is maybe all of it, but you cannot lose more. And that's kind of one starting point where people have to make sure that they don't get liquidated and they don't have enough to cover their max loss. And for put easy to see, if the price goes to zero, I have 1 ETH worth of puts and it's at the money, it goes to zero, I lose pretty much the price. So I guess there's premium involved, but yeah. So that's kind of where the risks have to be important, but then the opportunities also are pretty vast. You can do a lot in all environments.
We got a couple more questions for you. Somebody is Deep Shaw is bullish on Panoptic, so very excited about that. Another question: the FOMC is having their meeting yesterday and today. I think there's going to be some conclusion on the rate cut today. Do you have any recommendations on how to use Panoptic to trade this FOMC?
So and when you're an options trader, there might be like too many things to choose from, so it's hard to know. But one thing that most options traders, at least on the sell side, or those that monitor volatility, is that you don't trade directional. You don't know if it's going to go up or down. I'm telling you tomorrow what the result is ahead of time. Even in TradFi, you don't know which way the market will go. It's actually very random. So you don't go directional, but you'd rather capitalize on the volatility. And if you see an expansion, you can sell your calls, sell straddles, sell into that volatility. If you see, in a weird way, a different type of volatility, could be a contraction, there's a buy opportunity. But most of these one-off events, could be earnings, could be FOMC, could be events. I'd say that the increase in vol gives a good opportunity for option sellers. Again, if you can make money even though the price goes against what you thought it's going to go. So you can still be directional, but make fees. And this is what people maybe have been able to see in Uniswap LPing. But yeah, capitalizing on the one event that is very volatile prone is by selling options. And you can sell straddle, I guess, which would be non-directional, but you make money if it stays within those bounds. And maybe you say there's no way ETH goes below 3,000 and no way it goes above 5,000, given the event that it is. And maybe it's true. So you'll always be kind of in that range, but you'll collect volatility. So as we produce content, as we discuss this, volatility will be the main factor for a lot of those. And maybe some pools are boring and low volatility, so you may be needing to buy options. If it's high volatility, you may sell options. So yeah, at least most one-off events, you probably go into it in a way that's risk managed, but on the sell side and getting the protection you need, maybe. So yeah, something like that.
Yeah, this is big. You can't do this with perp, so you can
exactly
trade the volatility. You think the market's wrong on volatility, you can bet against them. So we have another question here. from Zerev's Damien. They're saying they trade on Deribit. Is there any strategy that they could have to arbitrage something between Panoptic and Deribit? Preferably something that's passive. They don't have to constantly adjust
Yeah.
the chain.
So definitely, a lot of what the Deribit is a centralized exchange that has a ton of liquidity, and you should lean into it if you have access to it, and you can trade. You can arb if you see, and it used to be like that. If you see the price on Uniswap being wrong, and you have an account on Binance, you can quickly kind of transfer your funds, and get like free money. The same thing could happen with Deribit and Panoptic. But I would say if you want to be passive, you just go long dated. So again, this is a super long dated option, put option on ETH/USDC between 1,600 here and 8,000. So maybe that's a good range in a year. But you would sell something on Uniswap, on Panoptic, buy something on Deribit, or vice versa. But it's like a basis trade of some sorts. Long the perp, short the perp, long the asset. Now you do short a put, long a put, but you do it at a long enough time scales that you collect any inefficiencies. And that would be kind of a, if you trade options now on Deribit, you can manage your risk without changing anything on Deribit, but say, okay, I'm going to buy 1 or 2 options or sell options on Panoptic to hedge that risk. If you're mostly directional in one way in Deribit, but for some reason the market, you think it could go down, you could buy options on Panoptic, for instance. So it's the more passive you want to be, the longer dated you have to go. In TradFi, it's leaps, which could be like 2-3 years in the future, could be 6 months as well. You don't have to day trade, you have to watch it every week or 2 weeks. And it's actually a good entry point for the world of options. You don't have to wait for. And that's why we start with monthly options by default. And that should be also what most retail focus on. We don't want to have you having to manage your positions 24/7. A monthly option every day, every few days is enough. And again, this is my own portfolio, but the 2 days ago, I created some wrap 2 or 4 days. There's actually no change in that case. Both of those are in range. I made a little bit of money, so it's a bit positive. But there's nothing I could do. I just have to wait. And with the gas price, wide, long Deribit, short Panoptic type of thing.
Yeah, the research team here, Amy actually has put out on the Deribit volatility versus the Uniswap pool volatility. So I'll drop that article in the chat here too for anyone who wants to explore that potential arbitrage further.
And again, those that have followed us, you follow us on Twitter, of course, but we are producing content on the research level because we think this is kind of the best way to onboard users. I'm quickly going to go over that one tweet, but yeah, we are producing a lot of content. Amy and Nathan here are doing this full time. In that case, we looked at the IV during the election days, and what you see is the green one is Deribit, and the purple one is Uniswap liquidity. And Uniswap is actually inefficient. They don't respond well as Deribit. So there is a ton of opportunities because this is high on Deribit, low on Panoptic. That's the type of trade you should do. Sell on Deribit, buy on Panoptic. And it flips. You made money if you were at this position. So a lot of what we'll see is that there's going to be an alignment of the volatility on both centralized exchanges and DeFi protocols like Panoptic, but also the field is going to be wild for the meme coins / medium to long tail assets that have no Deribit counterpart. So we will be creating those weekly. We will use Uniswap data, we'll use Panoptic data, we'll use Deribit. So overall, we just want to have people be informed as well about what the market is, but also how to create a market if you want.
Awesome. We have a couple other questions, so let's see what we can get to. Another question, a follow-up question about the FOMC meeting. If we're considering potentially like a 50 bips up or down interest rate change, could you do a long straddle instead of the short straddle that you showed?
Yeah, but then if the it depends. The buying a straddle means that, and maybe I'll show it. You don't know which way it's going to go. You just know it's going to move. And the faster it moves, the better off you are. And if you buy a straddle, and I'll do it maybe a bit narrower, or maybe very, very narrow. Let's see. you could do something like this, right? This looks too good to be true. You have someone to buy it, to sell it on the other side, but that's the type of trade that you don't know if it's going to go up or down, but you know you're going to make money if it moves. But the cost you pay will be somewhat something that you have to be careful of. But yeah, you could, if your hunch is that it's going to create a sudden move, that's fine. If you are a bit wider because it's going to be less expensive, but it stays in that range, then you could be paying a bit more than you think. We did some internal trading on the Brett meme coin on base, and it moved, but then not that much. So some people that thought about going long straddle ended up paying a bit more than they wished to, because it didn't move like 10-20% that you expect. So I would not advocate for specific strategies, of course, and what we say is not financial advice, but you have to like think in terms of volatility. If the volatility is high leading to an event, then these straddles will be more expensive. If it's low, you can capitalize on it. So it's just a matter of knowing where you're at. And in the case of the election, again, without that specific discrepancy that we see, probably was a good trade to be had, because it was high on Deribit, which is full of significant market makers, and Panoptic or Uniswap was low. You could be extremely well positioned by buying this, selling that, and then having this flip and be in the right type of mood.
Awesome. Thanks for explaining that, Guillaume. We have two questions from Andre asking, what does it mean to create a pool? And also, second question, a supporter of liquidity would not have IL. Like, how do you avoid IL by LP? So
yeah,
two questions there. Create a
I'm
pool and IL.
Yeah, I'm trying to. I mean, diagrams always help, of course, but it's easy to think in terms of Uniswap, because some of you may have even deployed a pool, but you start with ERC20s and you have the addresses. And if you go on the Uniswap website, you can deploy a new market, which is, all right, I'm going to put some MAGA Trump on one side, some ETH on the other side, and I'm going to launch a new Uniswap pool. It's just going to be a new market that exists. And you are the launcher. And then now you deposit some liquidity, anyone can trade these two tokens. That's the first step. What we do is a similar process, but for the options kind of business logic. If there's a Uniswap pool that exists, you just say, all right, let me create the smart contract that will handle the business logic of the option side. And you pay some gas, you deploy it. There's like a collateral, like ERC4626 token that is created, that is issued to you. So there just needs to be more logic added on top of Uniswap to make it work. So that's why the deployment part is there to, and then, I mean, we can look, this is the NFT that you got, but we can look at the transaction maybe. Yeah, it's a hefty transaction. Oh, no, this one was pooled, but yeah, it is a hefty transaction. It does deploy a bunch of contracts. So it's just business logic wise making options work. And the other one is that IL and permanent loss, all of these risks that you have been facing, I guess, on Uniswap. This was just in options lingo, gamma risk. And if you talk about gamma risk to any options trader, of course it's scary. Of course it's you can make you lose money, but you have to know how to handle it. And it's just this is what we expect people to see. We won't ever get rid of mathematical certainty, which is gamma risk, but rather we can mitigate it. And this is where the power of options kind of manifests itself. If you go back and you may have seen this type of view where you have impermanent loss, which is you lose on both sides. Here, typically they don't show the fees, but it's like on the red. You always lose on both sides. So that's kind of the scary part. How do you prevent these losses? One way is to be wider so that these losses kind of show themselves later. Another way is to, again, buy protection as well. And that's the not the beauty, but this is where options become useful, because you can now you can cap your risk on both sides. So again, you need a liquid market, you need people to sell the options, but you can imagine, you can imagine, this is flipped. You can imagine that the losses that you are incurring can be capped and limited. And that's how you get rid or you manage gamma risk. You make sure that large price moves have a limited risk. And you get this by either buying options or going wider or having multiple positions working against one another. So we want to teach you how gamma risk and impermanent loss are there, they exist, but there's a way to handle this. So yeah, this is the whole, yeah, no, that's fine. So there's a few ways to handle gamma risk and impermanent loss. Anyone that tells you they can get rid of it is lying, but you have to have the right strategies to mitigate it, control it. You want to buy insurance without having to exercise this. By buying options, you can also kind of have a limited loss on one side or the other. So that's kind of the gamma risk is what people have been facing with in the option and the Uniswap world for the longest time. We offer a solution, at least a mitigation for that. When you have to deal with volatility change or anything that is kind of vol-based, there's different type of strategy that exist. And one thing that I quite enjoy, and again, this is sneak peek, but you can combine options of different widths to create what looks like a risk-defined type of thing. And this is a lot of what I'll be doing myself. But you can buy a very wide one and sell a very narrow one. So you buy protection on both sides between 1,600 and 8,000, but you sell something in the middle that makes you money if it's in range. So that's another way that you can capitalize on using options to hedge. This is kind of very, very smooth looking. If you're in range here, you get paid a lot, but you are paying a little bit less than if you're in that range. So a lot of this will be discovery based. I don't even know what I'll trade most of the time, but at the end of the day, it's going to be the market will find the optimal point. But yeah, there's again more than one way to skin a cat, and in options there's always something. But at least there's tools available.
And is there a passive liquidity like thing that avoids impermanent loss you want to mention?
Oh yeah, of course. So the depositors will earn a fee. One thing that we will launch and we've been announced, but we have received a grant from the Uniswap Foundation, which helped us develop. We call this the Grow app, but we remove the options component entirely and only create what looks a little bit more like a lending protocol. So you deposit in the different markets your funds and earn an APY. And that is one way to as well deposit some ETH. You get ETH back and a bit more. Same way you do it on Aave or Morpho now. You deposit funds, this grows, and then you get it back. And if there's no protocol loss or risk of liquidations and whatever happens in these lending protocols can also happen in Panoptic, but you are now able to control which tokens get exposure, not be left with impermanent loss of conversion into the sinking token. I love wrapped II coin, but I may not be happy if it goes to zero and I sell off my ETH for that. So the PLP, passive liquidity side, will be a lot of where, again, most users will be comfortable with, because you just lend. And lending is part of the kind of the DeFi toolkit. It's been for the past 4 years. Now you just lend to market makers. And as I said, they are happy to pay a bit more APY because they get 3 times more.
Speaking of market makers, we have a follow-up question on a previous topic. So about the arbitrage, Xerox Gaming was saying, wow, that's nice. You know, I imagine it'd be slow to react as the arbitrages come in, but then those arbs will narrow as people continue to arb between Deribit and the perpetual options market. So his question, or their question is, do we have some type of market makers that are working on narrowing this arbitrage?
Yes, exactly. So this is the soft launch. The market makers will come in January. One of the market makers we deal with is co-located with Deribit, and they will be trading Bitcoin and ETH options. And for them, they will do this arbitrage and bring the two IVs in line. And you would hope because of that most users in the Panoptic world will see an accurate and kind of live IV, and that's ultimately what's going to happen. Most of these pairs, which if they have a Deribit or a centralized exchange offering, will be very, very closely matched. Same way that ETH and USDC spot pricing matches Binance most of the time. You see the same thing with IV on the big pairs that have a Deribit component.
Wonderful. We have one last question here before we wrap it up. But the question is, will Panoptic make their own token? Yeah.
So we don't have plans for tokens. We are launching, even the protocol doesn't have governance needs. Even the white paper was advertised as being governance minimized protocol. So we understand the landscape, but for now, yeah, no plans for a token.
And is there anything you want to say about points or anything?
Oh yeah, maybe so. Yeah, the system has evolved, and I think over the past month we've learned a lot about the successful points campaigns, the successful airdrops. I mean, Hyperliquid, of course, a good example, but there is a way that you can make most of your users happy, and that's bullish for everyone involved, and that's definitely what we want to aim for as well. And the points is one way to kind of incentivize and teach people a little bit. Say, hey, if you do this trade, you get more points. So not because we want to pump numbers, but rather we want to make you more successful. And same thing again, Hyperliquid had a similar type of campaign for different strategies, making people explore, be active on the platform. But the more you trade, the more you learn, and this is kind of what we also aim for. But yes, at the end of the day, what Hyperliquid did was a lot more what we want to model kind of our future than what maybe other protocols that had points that flopped when it was time to kind of see it develop. So yeah, I'd say that the system is maturing. We learn from each other's mistakes, and in our case, we'll definitely learn from like the better teams out there.
Wonderful. Okay, I think we're at the hour here, so it's been wonderful seeing the app. Make sure to check it out at app.panoptic.xyz and give our tweet some love. I will drop it here in the comments again. But thank you so much to everyone who has participated and been a part of the journey this whole time. And big shout out to the entire team for helping make this all possible. And we're very appreciative of the community that has brought us here this far. And we're very excited to see your trades and what goes on with the app. So it's live now on Ethereum. We have a pretty big roadmap to expand this to other chains, and also including Unichain and Uniswap v4. So stay tuned for more announcements there with the future launches. We also have the Grow app that Guillaume mentioned for passive liquidity providers with the support of the Uniswap Foundation. So that will also be launching on Uniswap v4 in the near future, TBA. But yeah, so very, very excited for this new chapter, and we're happy that everyone could join us here. Any last comments from anyone or Guillaume?
Yeah, spoken enough. But yeah, thanks everyone. Thanks for the team. Again, this was a humongous effort, and you'll hopefully see the quality. We were working on it, thinking about the users first, thinking about how can we onboard more users, how can we make it easier to trade. We don't want to make it like a Fidelity options trading that is pretty much impossible to trade. We want to make it fun and useful, but then also kind of have it show. So yeah, very happy about everyone's work there.
And I'd re-emphasize that, yeah, all of us are available on Discord, Twitter, anywhere, and we love feedback. So as you use it, if you don't love it yet, like tell us, or if you find a bug, tell us, and we'll get right on it.
Wonderful. All right, well, we are live. Go to app.panoptic.xyz and check it out. And yeah, we hope to see you all in a future live stream. But thank you. Have a great one.
Okay, thanks, you guys. Yep.